All right, good evening, folks. This is the weekend webinar for the online swing trading workshop. This is February 27th, I think, or 28th. February 28th, 2016. We've got a number of folks that are not here tonight because of business travel and whatnot, so in the usual way, we'll record this and hang it in the usual spot. I'm going to be working off of two different PowerPoint files. I'm going to hang those in the file section in Basecamp so that you can get a closer inspection of them or some research on them. So, in fact, I should probably do that now. Let me do that now, and then just ask you how you're doing. If anybody has any open issues before I get too far down the road here. You can see the agenda that we're going to follow there. There's Gil. Hey, Gil, I had lunch with Devin today. She wondered if you had received your thumb drive yet. She sent it with the U.S. Postal tracking number on it. Well, those are plantain chips. I should probably not be eating those, I suppose. I forgot how good this microphone is. I'm loading up some reference files, so if anybody, real quick here, so if anybody has any open issues before I get started, you can see the agenda that will follow there. All right, so the basic, if there's no questions, I'm going to go ahead and get started. Looks like we got a few more folks came on board, so here we go. Let me get this highlighted. All right, so we'll follow this agenda. I'm going to go over some insights for the week. There were some things that came out of the chat room and then out of the discussion groups inside our workshop that I wanted to comment on. I'm going to review next week's homework and the videos to review and make some commentaries on work group discussions. There were a couple FAQs to answer. And then I'm going to spend the bulk of the time reviewing the trades from last week's frames and the ongoing management strategy, and then do some framing of some signals that came up just from this week's report. Um, so let me, actually, before I get to the insights for the week, let me just get these real quick. Let me inverse the order here. So the homework review. So the homework for this week was to review the strategy description videos and post any questions for discussion. And these were the videos to look at. It was the the description of the 15 swing frames from last week, and then some models about how to put the daily trading plan into daily trading plan preparation into work, and how to turn that into execution. Some thoughts on the plan, prepare, execute, assess model. A sample on how to use the daily report to prepare your trading plan. A link to a couple 2-hour sessions that I thought were pretty good that had some insights into trading psychology and long-term performance that I wanted you guys to be make it available to you, because I thought there were some good comments in there. And then the weekend report review. Now, what we've got coming up for this week ahead between now and next Sunday, really the theme for this week is detailed examination of trade finding, trade framing, and trade managing. And so there's a couple concept videos like swing trading one day at a time, system A versus system B, to give you some thoughts about how swing trading can relate to the other time frames. And then a set of just samples of many of the different patterns that we have. There's an overreaction and a channeling. There's some 551Ws in there, the framing, and then some completed trades. There's washouts, one where it just frames it, and then a couple continuation patterns, and then a couple full-blown just regular washouts, washout 2 and washout 3. There's an 8DD frame, which was essentially a 5DD that never fired the signal, just kept getting worse until it became an 8DD frame. There's an ETF2 turbo example in there. Some folks had asked about ETF2. There's some 5DD frames and continuations. There's one where I went through a max pain day in the market. We got a lot of really good signals, so I framed up 4 of them from 1 day's worth of signals. A triple screen example, another 7DD framing. There was a question, I had an email about the quality reports and using that to find trade candidates. There's a structured approach to how to do that. You will also see in the daily report this 30-day and 60-day quality divergence. That's part of the quality reports. And so that's a nice example of how that can happen. And at major turning points like we're in right now, which I feel that can be an interesting way to catch the market at the turn. There was a question about the gap stat and day one activity. So there's an example of how the gap stat can work. I included an RLCO trade in there from Heather. Just send me which one it is, Lisa, and I'll redo it. And then that was from Heather, who does a really nice job of interpreting RLCO, and that has application to swing trading. And then another example on auto framing. So a lot of practical examples of trades in action, the finding, the framing, the managing of them. So that's the videos for the week ahead. Plus, there were a bunch from last week that you may need to be catching up on. So that's the videos for the week ahead, a full load. So that's homework 01. Homework 02 is review any of the info papers on any of the systems that you still have questions on. There's also one on strategies, which is the not the well-defined systems, but the general approaches to the market. And then especially I wanted you to look at the auto framer and the max pain range compression. I think those are really good opportunity trades that don't require extensive technical setups. They're just on the basis of trade location, and that has become more and more important to me lately. So I want to make sure you get a chance to see those. And then for March 6th, by next week, it's homework number 1 is reviewing these case studies that I just described. And then the only written product that I need from you is the homework 0502. Preparing a one-page summary of where we are so far. I mean, believe it or not, we're kind of halfway through this. Prepare a one-page summary of learning about where you are right now. What I'd like you to concentrate on 5 things. What are the best things so far? The hardest things to get your arms around? Any aha moments that come out of your learning journal that rise to the level like golden nuggets? What are the things that really grabbing you? What are the best takeaways for practical use? And then biggest unanswered questions. So something might be one of the hardest things, but you don't really have questions. It's just hard to do. So I would distinguish between what's the hardest things and what are the biggest unanswered questions, and keep posting those in the right board for the FAQs, and that allows me to build the agenda ahead of time. And what I'm talking about there is if you will put that on the this whiteboard that says weekly schedule for the Sunday chats. If you will post any questions on there for me, that's where I build the agenda from. Pause a moment while I upload one more file. So I've got the slides that I'm working off of right now. Yeah, Lisa, let me give you an extra week on that one because we're about a week behind because of the number of videos and whatnot. So I want to give you an extra week to produce that. Please. All right, so the second file is being uploaded now. I call it Swing Log, and that really is going to be all of the, once we get into the trade frames and whatnot, I'm going to shift to that one. So, all right, so let's get on with these slides here. All right, so the insight for the week that I want to share comes out of the chat room, and this was with Charles, who's been very brave with his transparent learning process. Been an amazing journey for him so far. He's doing great. Well, about 2 weeks ago, or maybe 3 weeks ago, I told him that I thought he had achieved the tipping point in his trading after about 9 months of heavy lifting. He'd gotten to the point where his 30, 60, 90 day, or 30, 60, 90 trade slopes were all improving. His expectancy was excellent. He was on track. He had minimized his errors. His self-talk had improved dramatically in terms of professionalism. He was self-actualized in terms of deciding what rule adjustments he needed to make. He was much more in charge of himself. And I said, well, I thought you achieved the tipping point. What I probably should have said was something along the lines that we discovered. Once he heard that, I think he felt, he had arrived, and so he started expanding some of the things he was looking at, and his performance started to decay, and so the discussion he and I had together was this idea of the tipping point, that I think the first 5 years of your trading life, your real goal in life is to not fail, is to become a survivor. And so I felt like that's where he had achieved the tipping point status. And I asked him, now think about that journey you've been on, pushing this heavy wagon of coal up the hill, and now you're at the tipping point. And now that's not a place to relax, but it's a place where the nature of the challenges change, that you fought your way to survival. And his note to himself was, instead of doubts about my plan, I now have to be extra vigilant to resist the temptations to stray from the predetermined route and start drifting into railway offshoots without the necessary planning and process. So what he found himself doing was adding things without that same level of rigor and attention that he had done on the front side of that hill. And then in the face of this newfound resistance, he was starting to drift into making maybe other changes to change the changes. And my guidance, my directive guidance to him was, stop all that, go back to the period of time in which you had established your groove and established excellence, and then recreate that performance by focusing on the basics. And once you've reestablished that, then start to expand in a deliberate fashion, one variable at a time, rather than trying to quickly add a bunch of new things. Don't throw out the baby with the bathwater. Don't take that as license to really explore dramatically. But really what we want to do is add to the craft work, add more things to his resume that are qualified to trade on. And so I feel he's kind of back to that status where he's confident and competent in the things that he knows. So it was just a return to basics. So success provides new challenges all of its own. And as we go through stages, we've got to just keep that in mind. So being mindful of where we've been and what contributed to the success, and then adding new things to our repertoire carefully is advice. So in the urge to go forward, because he felt like he had graduated from boot camp or whatever, that was not a time to get dramatically expansive. It was a time to take measured steps, because it was the measured steps and due diligence that got him up the hill in the first place. So I feel like he's back on track. What reminded me of that was my own flashcard about the train. When do things go wrong when you least suspect it, and how do you prepare for that? So you've got this nice train moving along, computing hours and all that, and then you're used to that single track, and now up here you've got this fork in the road, and the southern path leads over to cliff. And what is the signal flag that tells us that we've taken the wrong track? What's our speed? How dangerous is this? Casey Jones, you better know your speed. So we've got to keep doing our due diligence, doing periodic maintenance, knowing our business, attending to our safety brakes and whatnot before we go over the cliff rather than later. This was due diligence from Ashe, and reinforced some ideas that I thought were really important, that had to do with knowing your business and being mindful of opportunities. And this idea of this is a Great Britain pound and the USD pair, and this is intraday, but the same pattern still applies. Notice the pinch. Notice the signal that breaks down the break from previous lows after a period of narrow channeling is the signal. That is my all-time favorite signal. And here's why I think the downside is so favorable on this. That as long as there's reasons for people to believe that it could work, you get this, they keep trying so it doesn't fail. But when everybody is convinced it doesn't work, there is sort of a flip a switch and hope leaves the building, and everybody just turns their back on it. And that's where that collapse comes from. They're not even fighting it anymore. And so that price has that sharp move to the downside. So this is a 1 minute move inside here, and this is what it looks like on the 5 minutes. So again, notice that breakdown from previous lows. That's where you get the great decisive moves, in my view, after that period of sideways quiet channeling and then the breakdown. And then how our perceptions can shape the way we look at opportunities. Here's one where he's looking at 5 minutes, and this little move in the green box does not look like much on 5 minutes, but on 1 minute it looks like a standard play that gets out well all the way out to a Z3 opportunity for a 2R win. And so we've got to make sure that the visual array that we have is not making us look at moves like this as routine. That may very well be a tradable move. I like this pattern. A nice leg up. It pulls back in an orderly way. The dragon holds support. The 10 never gets through the dragon. It takes off again. That's this move. This is where it's going to fail. If it's going to fail, it didn't. That's information. RLXD, off he goes, a quick 2R, and he had an auto execute on that one. So preparation creates its own luck. Very nice work from Sonal on this one. Again, an intraday, but the principles for RLCO patterning still work again. And this has to do with emotional resilience and building up the muscle to keep doing what you do. So she had noticed this thing in a downward slope. She tried her short from here, covered here, tried a short from here, it reversed, and so she cashed here. She didn't have the emotional energy left to get this short, although she saw it in the moment, said, that's my signal to go. And then time, will, pattern, and money. The will wasn't there because of the emotional charge of those two trades. It didn't unfold the way she wanted to. And so that trade happens, and that's hard to take. But she's seeing those opportunities, and now what we got to do is remember each one of these looks the same when they're leaving the station, and your job is to take the signals that you prepare. Time, will, pattern, and money. What makes this nice is that notice that the dragon high, a lower high, a third lower high, a low, a lower low. So when you get this rollover, now the RLXD comes out of here. That's a pattern for continuation to the downside. Your target on that is still where it went before, the blue line. And even if she gets out here and then re-enters, I'm fine with that. But that's the move. You have to get that move. So build up the emotional resilience, time, will, pattern, and money. The most variable one on there is the will. Can you get to the zero state? Can you maintain the emotional resilience to keep going? This one was Charles. It was the same issue as before, and so he cut his loss short. He went fractional win, a nice win. Does not get the move from 6 and beyond. 7 is the place to re-enter on the RLXD. Notice the sell-off occurs. The 10 doesn't come through the dragon, and you get a 1, 2, 3 entry. And then the size of this move from 1 to 7 is the size of the move from the 7 to the top of the day. And so that was pure emotional resilience. One of the things I want you to notice is look how that PSAR tells you what side of the move you want to be on and which way the market is clearly going. So we've got to find ways to get back to the zero state and just trade it like, hey, I'm going to play 1,000 hands. I have enough chips to ante 1,000 hands, and I got to play them. And if I don't play them, I can't win. So trust your rules. And I would just reinforce those lessons, whether it's swing trading or day trading. They all look the same leaving the station. When that train starts to leave the station, that's that RLXD. It either came in and now it crossed over the dragon and is heading south, or the dragon is there providing support. The price and the 10 come back to the dragon. It pauses to refresh, and then it's a continuation play. Every one of those trades looks the same when it leaves the station. You can't know ahead of time if that's the one that's going to go or if it's just going to peter out. So you have to be willing to take the trip. You have to buy your ticket, get on, and then manage your station. So emotional resilience, getting back to the zero state, managing risk on each trade, being disinterested but not careless. By disinterested, I mean you don't have an overly emotional commitment to it that's costing you emotional resilience. This is another one where the issue on this one was CVX was one of Charles's standard plays because he was over the tipping point and he had expanded his span of control where one of his standard plays, he didn't see a just a perfect example of an RLXD and a Z3P leaving the river and missed what would be his normal pattern because it was a span of control issue. And so I come back to this one. There was a question about, and one of the discussion boards, about what do you do when there's with clustering of signals. And this, I come back to this radar screen time and time again, that I start in the center of my target by trying to get SPY and the volatility pair correct. I have to start here to get my read on the market, because that's about 50% of total performance is being on the correct side of the market. So what direction is the slope of the river going? And where is price with respect to that? So if I get the market and the volatility piece right, volatility is the early tell on directionality. Then my next look is IWM or EWZ, and then the Qs and the diamonds. If it's IWM, if those are better than the volatility pair, then if it's long, I'm TNA. If I'm short, I'm TZA. But if EWZ is better, then I can just go directly to EWZ and just trade that sucker because it's so liquid and so volatile, or emerging markets. And then as an offshoot of SPY, I can see what is technology, finance, staples, energy, and basic industries, basic materials doing. Is one of those 5 sector spiders materially better than the S&P? Is it a leading or a dramatically lagging sector? And those are tradable in and of themselves with options, with futures, just on the basis, even the ETF itself. And if the ETF is doing better than the market, are one of my standard targets inside there doing much better? The financials. So here's why we've got to be able to find our way to CVX right away. CVX was working, the market was up, XLE was up, CVX was even better. So we've got to find our way and quickly navigate to that part of the target array that's doing the best, because the market is worth 50% of what we're going to gain. The sector worth 25%, and then the company is only 25% of that. Now, in this array, I can quickly find something that's working. My span of control is really only 2 or 3 leaps in the chain. It's not, I've got one stack that has all those symbols on it and has the performances, but it only takes me 2 or 3 quick checks to find the thing that's working. What you don't get with some of this are the peripheral things that are on fire, some S&P mid-cap somewhere. But I'm trading off that opportunity for the regularity, the liquidity, the cycling of these large cap symbols. So let's get our target array set so that we can get a read on the market and volatility, and then find the sector, then find the symbol, so that we can get all those things aligned, working in our favor. Here's one from Robert, just a hat tip. Gold has been moving steadily up the stack in ETF2 and in the BMR. It's been doing well as the market was failing. And so his simple strategy, really, of looking at the weekly change in behavior, this is on this big candle that crosses over the 200 on the weekly. That's where it was supposed to fail. If this channel downward were to continue to fail, it should have made a new low, come back up to the edge of the river, or to the edge of the 200, and then rolled over. Instead, what it did gave us an elephant bar, as you would call it, and then another follow through. That is a change of state on the weekly basis. Very easy to see. This is what that bottoming process looks like down here. Notice the slope of the 20. Horrible, flat, and now favorable as it begins to close the gap to the 200. And now there's room in here. That's a 15% move just from where it crossed the 200 into this area. So we've got to be alert to those tidal moves those sector moves in these large representative sectors. And that's where that radar screen can be of help to you. So hat tip to RG. Let me just change pace just a little bit. Throwing a lot of material at you, but what I want you to think about is this as a journey that consists of some time that we spend on the near side of the river of self. And our goal is to be in tune with the market, right? And so one of our long-term strategies that give us long-term edges is this idea that if we get a combination of core swing trades and then daily intraday trades, we're operating on 3 different time frames in a way that is consistent and mutually supporting. And then we have things like this, the logic chain I just showed you, the market classification to know which side to be on, the slope stat and alpha stat to help us with the life cycle of the market's health and finding those strong sectors, the risk Z to help us with the volatility tell, the stretch stat to tell us how far out in front of itself the market is, or is there room to go. All of it, and then the statistical process control that allows us to evaluate our performance to see if we're in tune. So once we get across this darn river, that's where we want to be, is having a broad array of techniques and approaches that allow us to get the market right, and then the rest will derive. On the near side of this river, we've got all these things to work on in ourselves, things like our span of control, our own objectives, knowing our learning style and brain mode power, the use of sharing and collaboration to build on each other's excellence, learning how to re-enter, using our learning journal to capture those golden nuggets, learning how to manage our own internal chimpanzee, how to build up our emotional resilience so that we can keep coming back and keep going, how we can use the zero state to ensure that our will is correct, the way we manage risk, manage our emotional states, understanding our own risk tolerance and not violating that, the use of powerful metaphors to help us integrate our learning insights in a way that stays with us. All of these things are the things we do with ourselves before we propose to cross this river. And now to get across this river of risk, we've got these different little stepping stones of systems and strategies that we have to learn individually. And when we get through all these little steps, now we're actually on the far side of the river where those are simply parts of a larger strategy, and we're not relying on any single system, but we're relying on a bundle of systems. Along the way we learn tips. Along the way we learn techniques that apply to many systems, like the use of the RLCO framework, the xenostopping, the VWAP, RLCO framework, ready, fire, aim. It's the results histogram. All of these things allow us to improve our performance on the individual systems. And so just remember, this is a journey, and there are tipping points along the way. And our goal is to build our proficiency in a way. This is a metaphor that works for me to help remind me of just how challenging this journey can be, but to say that there are guideposts along the way. There are things that we can do to map our path. So don't get caught up in the trees and miss the forest, is what I'm trying to say on that. We are starting to work on the weekly ritual of, plan, prepare, and execute, followed by an assessment. And let's just remember that we have all these different indicators that tell what is the market's condition, how are these sectors being stacked, and then what are the individual companies within those. But if we get the market and the sector right, you can make a living on that. and the companies really are just a way to get a little extra juice. And the whole purpose of going through our daily and weekend plans is simply to find a dozen targets. It could be continuations of previous trades. It could be system signals or strategic approaches, strategies. And then what we have to do is prepare those targets so that no matter whether the market is going up or down, or we have volatility increasing or decreasing, that we can find a way to quickly go from the market to the sector that's working to the target, and there's a prepared trade all along the way. If I don't have time to prepare all these company trades, then I may just limit myself to the market and the sector. If I don't have time to prepare the sector trades, maybe all I need to do is work on the market and volatility until such time as I can be prepared. That's the purpose of connecting these theoretical systems and strategies into actual ability to execute properly when the market opens. So preparation is key. I love this one. This has everything to do with our job. Should you be practicing right now? Hat tip to Josh Wells. Even if you're a musician, you should practice. If you're not a musician, you should find an instrument and start practicing. Is there someone better than you? Then keep practicing. If there's nobody better than you, go find somebody better and practice. If you just finish practicing, rest, wake up, and practice. And if you're practicing right now, don't stop practicing. And think of this. This is that metronome, hitting it on the beat, that steady rhythm of performance, lather, rinse, repeat, making bricks. Finding that routine and refining it. And that was my message to Charles, that he had developed a routine that got him out of the swamp. He had survived, and when he hit that tipping point, he started to fragment. And so the way to fix that was not to get more fragmented or try this or try that new idea. It's no, stop, go back, regroove your swing, start with your rudiments, regroove, and get locked in. And then you should be able to do that faster each time that you find a need to reset. The importance of that statistical process control is to know when it's time to refine your groove. Okay, so that's everything I wanted to cover in those sketches. Those were the, if you will, the insights for the week and the commentary on the message traffic. A lot of the comments I see on the in your working groups are just excellent, and they have to do with a lot of the detailed work of what we're trying to learn. But I also wanted to take a little bit of time here and talk about some of those larger issues so that you can see how each of those little pieces are going to be fitting together as you develop your practice. Sometimes you got to back up and take a look at the wider picture, the wider time frame. So that's that. This would, let's see, we are now just about ready to go through reviewing trades from last week's frames and the trade frames going forward. And we are at 8:47. This would be a natural time to take a 5-minute break. So I'm going to do that and give you a chance to reflect on any of this stuff, post any questions you might have, get a quick beverage break, and then we'll come back. We're going to start on the trade frames next. So those files are uploaded in the file section on Basecamp already. So if you want to follow along those, you can. So let's take a 5-minute break, and then we'll get started. Okay, we're back. And I'm just going to go, we got about 15 or 16 of these to go through. So these are symbols from last week's markup and how I traded them forward this week. And I'm going to demonstrate a variety of techniques. So trade number one, so that's week one, trade one, was Goldman Sachs. So Goldman Sachs had been, finance had been beaten down. There had been this little bounce that had started to fail. It looked like this. And so I was prepared to go short that way. So now what I'm trading that one on is the 2-hour chart the next day. So this is on the 22nd. It's a slight gap up, and then going into the close, it breaks through the river. Breaks through the dragon, crosses the Bollinger Band mean. The whole market is showing weakness, and so I take that short here at 146.50. My stop, because this is a swing, let's see if I make it a little easier to draw here. Now, if I'm intraday on this, then my stop is normally here, just on the other side of the dragon. But because I'm swinging this one, I go back to the next higher hump in the dragon. This one looks like a decisive support level to me. So I'm short at 146.50 with about $4.50-ish of risk. For my trade frame, my target is down here around 140, and so this is in the last couple hours of the day we get that short and holding it overnight. The next day it opens where it closed and then sells off hard all day, and just from the 23rd to the 24th, on the 23rd going into the 24th, it gets down to my first target down here at 140.40, and this is where I have to make that difficult day one decision. Is I'm holding maybe one and a half R on day one. So what am I going to do? My tendency is to just take it there, but this is a swing trading workshop, and I'm on a weak stock in a weak sector in a weak market. So if ever I was going to hold something overnight, I would like to do that with markets money in hand. So what I do is I bring my stop from here down to just in the money, and that's what I look at on the next morning. So the next morning it opens where it closed, and then immediately starts taking off, and it moves back like half an hour against me, and that's enough. The whole market is starting to work. The financial sector looked pretty good. It was better than the market, and so I just cashed that one, and it turned out to be about 1 hour. So that's a short-term swing. It's an unusual behavior for me to hold it overnight. I wanted you to see that a 2-hour refinement moves pretty slowly. You can be doing other things at work because it takes a long time for those moves to unfold. And the initial risk is $4 instead of 40 cents. And it's the top of the dragon's hump over here, not just the other side of the near-term dragon. And then the decision was whether or not to hold it overnight, and then how long to stick around the next morning. It had already gotten back to that long-term fair value. You can see the RL270 right there. What I didn't have was the gumption to be able to get that rebound. Now as I go forward looking at this thing, this is sort of a continuation pattern. We're still in bear normal. Financial sector is still weak. It moved back to a place where the last time it got here, it failed. It's already had a couple little pieces of fill. So if I'm going to get short, I can get short at this thing where I got short before with a target down to here. This may be something that I can do if it opens up inside this and it's showing weakness and the market's weak. That may be one that I can start on day one technique. So I feel like I've already got this trade frame in place, and I have some situational awareness of Goldman Sachs, so that's why it's on my short list. Now I can still use this trade frame for this week ahead, and basically playing it between 150 and 140. Okay, moving on. Trade number 2. This is also using a 2-hour strategy for the day of the trade. And so what we have right now is on the 19th, the trade frame was set up. It opens on the 20th, so that's the 19th that I just highlighted right there. So it opens on the 20th in an orderly fashion, takes out the previous day's high. So we're long here. We've got our my stop is down here. Oh, I'm sorry. This is looking at a 30-minute chart. So if I'm not using the daily candles, I will either use like the 2-hour or the 30-minute. And so this is a long entry now at 55 1/4, and it's using the $3 stop at 52 1/4, and this is based off of the swing low on daily charts. So we get it's sideways for a couple days, a gap down, and it has taken off. So right now we're a little bit in the money, but not much to speak of on here. But we already saw that strong financial move in Goldman. That move that I missed in Goldman is the move that I have with AXP. So I've got one position in right now in the financial sector as a swing, and I feel like this is doing okay. Patrick asks, what determines whether I use the 30-minute or the 120? I look at them both. I mean, if you've got a half a dozen or 10 positions, I mean, it takes a mouse click to switch between them. And 30 minutes, is if I have enough time to look at the 30 minutes, say, well, I'd like to start with the 2 hours. If I think I'm going to hold it for 10 days, then a 2 hours is more than sufficient. Where we are right now, though, in a bear that has been volatile, it just became bull normal. I don't mind using a 30-minute. If I really think I'm going to get out of it today, at 30-minute, I'm probably starting to look at that. If I go below 30 minutes, then I'm definitely intraday trading. So 30 minutes is about as low as I go on a swing trade. And that's really has to do with how close to executing on that day that I am. So it's not unusual to just toggle back and forth between the two. But the things that you see on the 30 are not that much different from the 2 hour. If you play around with it on free stock charts, you'll see what I mean. So this one is just trade 1002. This is AXP. We're in here. Our stop is still down here. We're a little bit in the money. I would like to see it be able to get through this hump and go as part of a. Here's why I think it's going to go up, because Hillary Clinton's going to be our president, and she's in the pocket of all the big banks. They own her. So a Clinton presidency is going to be great for the big banks, and maybe that's what this rebound is. That's my excuse. Yeah. Mighty Hillary. Okay, trade 3. This is ExxonMobil. I'm also using a 30-minute one on this one. And 30 minutes, again, because the energy sector has been so volatile, that's one that I don't mind using 30 minutes candles on. So the trade frame was done on the 19th, so it opens on the 22nd. Remember, the energy ExxonMobil had had a nice move up into here, and then gave me this double top, and then started to roll over on the 30s. And energy sector was weak that day, so I get the RLXD entry on the 30-minute. So that's this entry right here. That's the RLXD as it breaks through the dragon. So my entry is here at like 82.40 with about a 90-cent or maybe $1 stop. I just went with the top of the day and that top dot. I hold it to here. I move my stop down to just inside, just slightly in the money. It gaps down the next day, starts taking off. I try to hold it because it's a swing trade. It gives me this. The next day it does this. On the 25th I cash it because I can't take it anymore. I find swing trades harder to do than day trades. And I was at the yellow dot is where on the 24th I was prepared to cash it because I had been this far in the green and now I've given back almost half of it. And I was really tempted to just cut it right there. The next day it came down, and then I noticed that it made a higher low on the intraday on the 30 minutes. And I noticed that the bottoms of the dragons were also facing up. So that gave me some sense that maybe the easy money on the downside was over. And so I just decided to cash it here where I felt like I wanted to cash it the day before. And that kept me, if I'd have gotten all the way up into here, I would have scratched the trade. So I feel like I was able to get a little piece of that. So that's ExxonMobil. Again, bear market, as volatile as energy is going to be, that's where I'm more likely to use these swing trade setups. Willing to hold them overnight, but I'm not just using daily charts. So swing trade setups, but intraday execution on a much longer time frame than my typical intraday pattern. So I find this actually kind of relaxing during the day. I can be grading papers. I can have my headphones on. I can have alerts in the market that are audio. So if it hits a certain price, I get a bing, and then I know to come over and pay attention. So that's trade 3. This is trade 4. This is Procter & Gamble. So this one was chosen because it was a Dow 30 leader in a strong sector, large cap leader in the Dow, one of the top 5, has been consistently. I mean, this move just in the past, 6 weeks has gone from 75 to 82, so that's almost a 10% move. The signal was on the 19th, or the setup day was the 19th, and in the standard frame, it needs an entry 5 cents above. That's the green line, so we get the entry around 82.40. My stop I bring down to here to the swing low and the first PSAR dot, and basically it's also the Bollinger Band mean. So that's about almost a $3 stop. And this thing is just kind of mucking around right now, so it's underwater a little bit. But I like that the slope of the 270 is up, that the river is up, and really all it's got to do is get above this sideways congestion here, and this thing could go. So Procter & Gamble, I still like that one, and we're just going to let that run on a daily chart. So that's that one's open position. Nothing to do but just watch and wait. Trade 5. This is McDonald's. McDonald's was also a top 5 relative strength Dow 30 winner kind of a play. And so in this kind of market, the market has been putting in a bottom over the last 30 days, and so I like to stay with the leaders on the long side. McDonald's is one of those. And so here's the day of the 19th was the setup. And so the trade frame is 5 cents above. So we get that one around 117.10. I go over here to the swing low, and the first PSAR dot, it's about a $5, or maybe $4 dot, 4.25. And we're still, it's kind of like break even right now. It really has to, I mean, my target on this one is the top of the dragon, and then the top of the swing high. If it can get above, 125, then off it really goes. But this is just a single position for right now. Has resisted the urge to sell off pretty well. So that one's just open and working. Trade number 6. This is Coca-Cola. Also a winner, but it was a Dow 30 winner. This is the same trade essentially as McDonald's and Procter & Gamble. Here's the 19th, the day of the setup. We get the orderly, takes out the high of the previous day. I go down here to just below the RL270 and the PSAR dots. So there's my stop. We're about half an hour in the hole right now. Friday sucked. So this is one that I'm not feeling it right now. It's if I get any kind of weakness on this one, I won't let this come all the way back. So this looks like a candidate to cut the next day. We'll see how it looks tomorrow. Not much else to say on that one. Next up is Walmart. So I wanted to show just a little bit more time frame on this one. So Walmart has been a top 5 relative strength leader as well. Its recovery has been pretty good. It's had these 2 little spike downs. We got a 1, 2, 3 entry on it earlier in the month, and so we're in at 64.80. We got a maybe $2.50 stop. And when I go back and look at the support and resistance, so this is just going to be one position till it gets here. But if I can go back this far and say that's where the collapse, it had been sideways, and that's really where the collapse was, and this is now the rebound. If it gets above this level, then this is where I'm looking to add a second position, and that will be the cup fully formed, and then off it goes. So I'm going to play at one position. As I said, it is a relative strength winner, and it has momentum, and it's an RLX. This was a 1, 2, 3 entry using the RLCO framework. This is a strategy and not a system. And that's, if you look back at the trade frame we did last weekend, you'll see the structure on that trade of what the actual entry. Now, this is a closer look at Walmart using a tighter time frame. Now, what I showed you was looking at daily charts and why, if I take the long-term view. Now, if I dial down and use, I think this is 30-minute charts. No, that's the 2-hour. Yeah. So if I'm using a 2-hour chart if I'm trying to take the bird in the hand, then I'm much more likely to do something like it. Here's that entry that we got with that same stop. Only now using on the 4th, we got 4 days in a row and it's working, and then on Friday it gives a sharp down, down, and down, and there's a 1, 2, 3. If I'm using 30-minute charts, there's a real good chance that I just take that one on Friday and be done with it, and I get to collect this reward against that risk, so about a 0.8. But because I'm looking at dailies on that one, I would be more inclined to hold it, which is what I'm doing. I just want to show you that when you change your time frame, you're going to put yourself into psychological different spaces. That's one of the things Robert has noticed about, has been talking with Sonal about in the chat room, is that the more charts you look at and the more time frames and the more indicators, you are generating cognitive dissonance, and it will make you uncertain where you once were certain, right? So now this one is the 30-minute chart. The last one was the 2-hour chart, pardon me. This is what that same move looks like on the 30-minute chart. So we get our entry, we get that nice orderly move over 4 days, and then we get this sharp sell-off again at the Bollinger Band mean. That's one of those where I might be willing to just take this move against that risk and get about 0.8. But what we're doing instead, if we look at it from the daily chart, now we're looking at it on the daily. Try to zoom in a little bit to make it easier to see. I'm not worried about this one on a day. I'm sort of willing to give it room to run because the larger time frame that I'm looking at says this entire move down that RL270 was sloping downward. But this move here was enough to turn the RL270 to flat, and now the RL270 is starting to creep upwards. And this is on a symbol that is one of the Dow 30 leaders. And it's had the 2 sharp sell-offs already. And I feel like I got a nice entry on the 1, 2, 3 right at the Bollinger Band mean. So now rather than cutting this thing off now, I'm willing to let it come back and scratch. I'm going to have my stop right here at the green line plus dinner for 2. And just give it this extra little bit of room to run. So I'm willing to give it that much room to work with the idea being that if this finds support like I think it will, or it might, then it has a good chance of getting to 72, and at 72 I will have cleared all of this congestion. I will have gotten up here by this previous move, and that's where I'll look to add a second position around 72, and I'll have more than 2R in hand. So by taking a longer view, I'm looking at this as a trade that could last weeks, 10 to 20 to 30 to 40 days on a swing, whereas in a bear normal or bear volatile where the whole market's melting down, I'm much more inclined to use that 30-minute and the 2-hour chart, and then my trades on swings are only 2, 3, 4 days because you don't get as much upside follow-through in bear markets. On the other hand, the reason I'm willing to take a longer view on this one on Walmart is because the market has bounced 8 to 10 percentage points off the bottom. The volatility is drying up. This is a Dow leader. The Dow is the strongest sector is the second strongest sector in the U.S. It's the large cap conservative money makers like Walmart that are leading the way. So this is one that I'm feeling like I can give it more room to run, if that makes sense. Robert asks, or says, yeah, the 20-day moving average is now over the 200. Yeah, that's a favorable thing, and I join that with this idea of the RL270 has started to slope up. That tells me, I take that as a sign that institutional money is starting to move this hog, right? Tactical traders can't move Walmart from 57 to 67. That's a 20% bounce. So that's not just tactical traders day trading. That's buying programs from big money, in my view. What is the date the chart starts at? This, I think, is, let me scale it back. I think this was about 4 months. Let me find the scale. So this goes back to, looks like about 1 August. Yeah, 1 August. So this includes that great big horrible August sell-off business, and that's Walmart. I mean, that's America right there. And really starting in mid-Thanksgiving, mid-November, that's Walmart. That's America. So that's why on this one, Patrick asked me, why would I use the 30 or the 2-hour versus the daily? This is one where I am deliberately adopting a longer view. I think it's going to come up to this. If it completes that move, that's your cup. And then if it gives a little handle, what is it, cup and handle? And then once it breaks through that line, this thing is free and clear. And then everybody will think, yeah, Walmart's easy. So this is one I want to try to stay in. Okay, so that's so the point of this one then was to just show the different mindsets you can get in when you look at different time frames. 7, yeah. So this is Walmart again. I just want to reiterate that point. If I'm using a 30-minute chart, then that feels like a move I want to capture so that I can lock in, this is like a 0.8 probably. And even on the 2-hour chart, it's basically the same move. So that's enough on Walmart. Okay, over to Treasuries now, trade 8. So if I remember, Treasuries were a triple screen set up on the 19th. And so there's it was a little doji day on that last Friday. And so the next day, so the trade frame was enter 5 cents above, and I'm going to use this stop down here below the swing low. On the 22nd, that Monday, it was an inside day, never got the entry, but the next day it was like a morning hook, but I waited until it took out the mechanical entry. So I'm long on the 23rd from 131. No, it moved to 133. So that's like 1.8% on an intraday basis. If I was looking at 30-minute charts, I'd probably end up just cashing it on that day, especially when it opens, ran to the top, and then came down. I would most certainly have been out of it if I'd been using my intraday. But on a swing trade, that's just noise at the swing trade level. So we're in here, and the stop is still here, and it's a little bit underwater, about minus 0.3 right here. So this is really just, this is basically a hedge. This is basically a hedge against, because we're in the bear. If the bear reasserts itself and this is going to go, I would be looking to add around 135. And then I'm still respecting the stop. So this is just one that's cooking. Trade number 9, this is Microsoft. Microsoft is one that we also framed it on the 19th, but this is one that I had been trading anyway, so I wanted to just keep it in the portfolio for management because I'm active in this one. I actually got in on a 1, 2, 3 entry down here. This was a Z 2.5, and then I bought it as it entered the river. So I'm in from 50.70. My target was the swing high. My risk is down here, and we're just kind of mucking around on this thing right now. It's a little bit in the money, but Microsoft has been one of the tech leaders, so I'm optimistic on this one that if the market follows through and tech starts a recovery, tech has been lagging. This is one that I think is postured to continue to go. So that's just one that's working. Trade 10 is Apple. So Apple was one that we framed as a sideways quiet channel, could go either way. And so on the this was the day of the frame. It's off 1 day straight. So my entry didn't get hit until Friday. My stop was down here underneath the swing low. So this is just one that has just started, and this one feels proper to me because I see the early stages of a improvement here in the dragon. The dragon is narrow. This is where the dragon was very wide and sloping down. And the river was sloping down all the way to here. The river has basically gone flat. You can see the dragon is starting to slope up. And it had a higher low. Where's that mouse? There we go. It had a higher low here to here. So multiple tests of that one, and now off it goes. It's like a 1, 2, 3, and it's through the dragon. And you'll notice the RLXD entry also. So we're in from 96.90 with about a $6 or $5 stop. And my targets right now, my initial target back on this first frame was the RL270. My target now has come down to 102 because the RL270 is decayed. And if it gets above here, though, I think it's got a really good chance to go because of this previous swing high. It has to get through there. If it does, then off it goes. All right. Let's see here. Trade 11. So this is when I have been trading this. Yeah, failure to fail bar on February 19th. That's where if it was going to fail, it should have, but it didn't. So this is when, and this is one that I've been trading the crap out of with that hybrid frog and have been making money with it and got a nice, it had been oscillating in this little channel here to here to here to here, and it got to here, and instead of failing like it should, off it went with power on a good day for the market. So I just used market's money and bought a swing position with it, and then put the stop below this big there's a big elephant bar in here. And so this is one that has just continued to work, and I'm at the posture on this one where my stop was here the whole way, and now I've moved it up to here. So I've locked in this this little piece. Looks like about 0.8 or so, and I feel good on it. That Friday completed a 1, 2, 3 entry for that thing, and it's free and clear above this, and there's no red. If you come over here and look at all the, there's nobody selling this thing at all. That's all buying pressure at that price level. And then my target, if we had gone scroll back in time, the next target on this thing is up around 102. So I feel pretty good about this one. This is one that I continue to trade intraday. This is a perfect candidate for core and turbo for swing and intraday because it's very liquid, it's very volatile, it moves independently of the S&P. I've got markets money in it. and it is an orderly mover during the day. And what I want you to notice is the difference in the RL270 after this elephant bar thing, right? This is where it was supposed to fail, and it failed to fail. And this move here is enough so that the RL270 was downward sloping, and now the RL270 is upward sloping, and it's got momentum. So this is a very positive sign. So I like Win here as a core and turbo. That's going to be one that I manage very closely. Okay. That's trade 11. Trade 12, this is United Health. What I like, this is a, this one I believe was a Max Payne. Now, this is really interesting. This is why I think the market is changing, and why swing trades can maybe clue you into some improving conditions. Here's the first thing that I like about this. This is the bottom of the dragon on this little hump. This is the bottom of the dragon on that hump. I want you to notice that it is upward sloping. It's improving in that the dragon is leaning forward. Now the next thing that I like is when I draw this, the previous resistance on the dragon's, his top hump is right here. And this is where it should have failed if it was going to fail. It didn't fail, so we buy it at 118.50 with a stop down here. When I go back in time and I look at this thing, this is a really significant resistance level here, about around 124. If it gets through 124, this thing is going. It's going to go large. We're going to look at it on a longer time frame here in just a second. But where we are right now is the entry is here. My initial risk was here. It's got a 1, 2, 3 moving up. I should, now that I look at this, I should probably move my stop to here. I'm going to do that tomorrow. But let's look. Now this goes back about 2 years of dailies, and in 2014 and 15, it was all healthcare all the time. That was the huge sector, 2014, 2015. The second half of 2015, I think fear of Hillary care or whatever, there was a great big sell-off, and we've had this. I think that's over now. And the reason I say that is look at what the RL270 did. And now we have this move above the RL270. So that looks kind of muddy from a distance. But I want you to recognize that that is a significant difference. And all it has to do is get above 125, another $4. And then the strongest stock in what used to be the strongest sector, but which has been on sale, is now free and clear. So that's why that 125 is a really important price level, in my view, on United Health. If we back out of this thing a little bit, let's go look at weeklies. Now you can see the move in United Health from 5 to 120 in 6, 7 years. And then this last year is really the only negative situation it's had, and you can see it already starting to peak. So if it gets above 125, off it goes. All this price action up in here is mostly buying. It's almost all buying. The only selling came from earlier when it had that big sell-off. So if we zoom in now on that weekly, if you discount this anomaly, this 5 sigma sell-off in 1 week, which rebounded that same week, by the way, now what you have is this long period of SQC, and it's voted its way out of there and closed very strong. And if it gets above the dragon over here, again, off this thing goes. Postured for success. And now on a monthly, you can really see this nicely. This is very favorable. This sideways quiet channel is being resolved to the upside. And again, all he's got to do is get through this purple line to 125. Off it goes. And I like the RL270 is up. The river is up. The dragon got overheated during this period. Look, he got all the way out of the river, and now he's come back to the river, but it's got a very narrow range. This is a healthy pause that refreshed. He just caught his breath, and I think he's ready to go. So it's hard for the dragon to get out of the river, and when it does, it's a period of overheating. It came back to the river and is riding right along the river, and now we got these higher monthly lows. It took out this 3-month high. We got the first dot down here, and again, all we got to do is get through 125, and off it goes. So I really like that UNH. And that tells me that the healthcare side, I think it's the XLY or XLV, that may be coming back into play now. That's in the XL Spider series. That's one that has not been part of the defensive plays. Normally they are, but it hasn't been because of that 2 to 3 year long run up that just got overheated. My spider sense is tingling that we may be ready for that move again. Okay. Trade number 13. This is Dow. And this is one, there's the frame was on the 19th. We got the entry 5 cents above. I come down here to just below the Bollinger Band mean. There's about a $3 stop on that one. We get the entry here, has a little dip, but now I think it's free and clear. The next target, there's some clear resistance up here at 54. And what I want you to notice again is the shape of the river has rolled over. So the river had been down. The river pinched. And now it's starting to expand with upside volatility. The dragon is at the edge of the river providing support. There's a 1, 2, 3 entry. So I really like this one, and I think this is one that can go all the way to 54, and this is one of those large caps, conservative companies that are in favor right now. So I kind of like that. All right, we're almost 2 hours into this thing, hour and 45. So the only extra symbols that I have quite a few open ones right now. And this is still bare normal, so I don't want to overdo it. But the ones that I really want to concentrate on going forward at Walmart and United Health, I like the small caps here because they are, if we're going to see a resumption of trading, they've been beaten down so much that there's a chance that for that really to go. Treasuries, I think I'm gonna have to cut that swing position short. I'm using it as a hedge right now, but that could disappear pretty quick. I'm gonna look at Disney and frame that one up later tonight. But I really think I want to concentrate on managing the open positions that I have. I'm about at the limit of my manageable symbols because I got half a dozen or so open positions that I have to manage intraday in addition to the day trading. So from a span of control perspective, I'm about maxed out on the swing trade open positions. But I'm gonna go back and frame Disney later tonight. In fact, maybe I can just do it right now. We got a few minutes yet. I'm trying to remember why Disney was. I think Disney was a failure. I'm gonna play Disney as a weakness right here. Oh, this is monthly. I'm sorry. That's not weak at all. This is actually okay. We're almost ready for a 1, 2, 3 entry. Yeah, now all of a sudden I like Disney. Kind of changing your time horizon can make a difference. So I'm going to put, there's that one. I'll buy it here. I will put my stop down here. This is where I will stop and go short. Or if it violates the red line before the green line, I'm ready to go in either direction on this one. I'll go short at the red line or long at the green line. Do I still hold TLT in BMR when I cut the swing? Yes. The BMR I execute according to the plan. If I'm worried about the TLT position in BMR, I will make up for that on the long side with the swings. Let's see. Let's look at Apple. Yeah, I think we have we're already long Apple here. So the frame was on the 19th, that's right. And we got long Apple here on a 1, 2, 3 on Friday, so we're already in. And then the target on Apple, I'm just going to go put that here because now we're in. Come on, vertical line, work with me here. And what I'm looking for in the target on this one is up here at the RL270 at Z plus 3, so I'm looking for 102 on Apple. I think that double bottom is going to hold. The dragon is pointing up. We got an RLXD type of an entry on Friday, and I think they're going to be okay. And as you can see, there's a lot of room in Apple to recover because he's got to get to 102, then 104, and then close up to where it first had the big sell-off. That's Apple on sale right there. That's what that is. It would not surprise me to see the market start pricing in a Hillary Clinton presidency. she's big time corporate payola, so Apple's going to do well under her regime. Is that one candle back in August? Yes, that was the flash crash on the 24th of August. Everything got crushed that day. All right, so that's everything I wanted to cover. If you go through the audio for the weekend report, you will hear me talk about why I came up with all of these. These up in here, these were all kind of momentum plays, but they're not things that I trade routinely. I've got enough things that I trade routinely in the form of these relative strength winners, relative strength losers, result that I have enough things to do in the week ahead. Those are going to be things I investigate because they had some amazing price performances over the last week, but I don't want to chase too many of those because that diverts me from my primary edge, which is, I think, managing markets and sectors in the large cap. So, yeah, Robert, I agree. I just read some articles on that this weekend too, so it's not even close. Democrats are good for business. Okay, so that's everything. We're about 2 hours into it. I'm going to go ahead and stop this one here, get this thing uploaded. Hopefully, you got a sense of swing trade management. I will tell you that for me, the swing trade signal generator is how I frame it and get interested in it, and basically how I get into it. And then no matter how I got into it, I tend to manage them in the same way by looking for constant reward to risk, and then how soon I cut that trade off is really a function of the market condition. Right now, we're in that transitional state from bear volatile. It just became bear normal, and we're only 1% away from being sideways, and we're a little bit more reduction in volatility, and we're into sideways quiet, and then that becomes favorable for the long term. So I really feel like we are catching. If this is a turning point, then we have been given plenty of warning that this is actually a turning point. I take Apple as a proxy on that one. So if there are any questions or whatnot, reflect on this for 24 hours. Go through your trading plan, get your notes together. Questions that start emerging, go ahead, get them on the right board that I showed you, and then that becomes topics for either more videos during the week or lessons on the weekend. But you got quite a few trade management videos to watch this weekend, so I want to give you a room to work on that stuff too. So keep up the great crosstalk in the message boards. I'm reading them all, and just remember that the little picture about the path, the stepping stones across the river. This is a journey, and it's a risk management. Be careful of where you place your next foot. Don't get lost in the trees and miss the forest and all that stuff. Keep up the good work, good crosstalk, and we'll see you in the chat room and on the message boards.